this will be the final video. It's a little three-part series here introducing you to Lazy Days lines. We talked about what they are. We talked about how to set them up. We talked about the mentality behind how we use them. Remember, these are just decision levels, nothing more, nothing less. They are support and resistance. So how do I put the pieces together? Where do Lazy Days lines come in terms of either supplementing your charting or supplanting certain tools? Now, I know that not everybody is very comfortable with, for example, Fibonacci retracements. If I were to pull up a 180-minute chart of the Euro US dollar here and draw a Fibonacci, I realize not everybody's fond of this particular tool, and that's fine. Okay, I think that any tool that we don't understand that we attempt to use is pretty futile. Add to that, Fibonacci is very subjective. You know, what's the last major move? I might have drawn it like that. Some people might have seen it as this. Okay, so again, we're talking about a tool that there is no one single Fibonacci retracement on any chart. We might pull up two or three. Okay, that's usually where a lot of people start to wonder, well, how do I know I'm using the right one? How do I know I've drawn it properly? And with that doubt comes a lack of confidence, and without a lack of confidence, we don't follow through on our trading plan. It's hard to react with confidence at a decision level if we don't understand or feel that we're using the tool correctly to begin with. Now, the only way you're going to gain confidence in these Lazy Days lines, it certainly isn't because I said they work, because bottom line, who cares if I say something works if you can't have the confidence to use it on your own? The only way you're going to get confidence to use any kind of tool, Lazy Days lines, anything, is going to be, number one, comprehension. Why do I feel Lazy Days lines are powerful tools? Well, I have full faith in my wave. I know how well it works, and a lot of people who now utilize the 34 period exponential moving average on the high-low close know that as well. So if you're one of those folks, you already in a way have taken the first step into believing and understanding and seeing the proof that exponential moving averages based upon Fibonacci levels can be really powerful. So all we're doing is adding the rest of the string. Okay, now gaining confidence in the 55, 89, 144, and so on, the best way to do it is, number one, okay, we talked about the comprehension, understanding what it is you're using. Real simple, exponential Fibonacci-based moving averages. Second step, put them on your charts. See how often price respects these Fibonacci-based moving averages. Because unless you take the time to do that across multiple pairs, across multiple time frames, you're not going to ever prove to yourself, to your eyes, to the clarity of the support and resistance that they do provide. Okay, again, I could be blue in the face here, but until you see prices stop at, for example, here, the 55 EMA, or if prices are going to, on the way back up, stop at one of these moving averages, you know, if they'll find support here down at the 233, you have to observe price action in order to create that confidence to use a new tool. Okay, here I see my 34 period. Could this again be part of the Lazy Days? Well, it's the same thinking. You know, why would I think that there would be support in this 64.29 area? Well, for me, I have confidence visually and over time in the fact that I understand why I'm putting this moving average on my chart. I've seen it work over and over again. So comprehension, confirmation, that's what we're talking about. Can you confirm visually the fact that what you're using is working? If you can't confirm it, then you're never going to trust it. You're never going to believe it can work for you. And you'll never get to confidence. So what's the step? What's the recipe? Comprehension, confirmation, and that's all on you. I can do everything I can do to try and teach you what these things are and why I use them. But part two, the confirmation, that's all on you. I can utilize these as often as I can to help you gain a certain visual trust, visual reference to these. But in the end, until you start going through different time frames and seeing, for example, right here, this 144 at work, it's just not going to ever get you to confidence. So that's what I got to leave you with here. You put these moving averages on your chart, go through different pairs, go through different time frames, and see how often these are decision levels. Fibonacci is not a trading tool. It's much more important, much bigger than that. It's a law, a mathematical law of nature. And that's why I believe that they work as well as they do, whether they be an exponential moving average, whether they be the wave, whether they be a simple Fibonacci extension and retracement series. Okay, so prove it to yourself, get to confidence, and you'll see that a lot of the work you're doing manually can be supplanted or supplemented with the use of lazy days lines. Thanks for joining me.